Good morning, everyone, and welcome back to your Daily Five. I'm Leslie Jouflas, and I'd like to thank StockCharts for inviting me back. I really enjoy doing these shows. This is where we have 10 minutes to present five charts. So today, we're just going to quickly go over the S&P. Let me click back to my chart here. There we go. And as you all know, it's approaching the 4,000 mark, and that's a big round number. And it's not unusual to see some volatility around these big round numbers. So what I've done with this chart is I've just marked in a couple of Fibonacci retracements, and you'll notice these dashed green lines there. Well, many times markets will have kind of similar size moves. We can see that down here in the September to October, that correction there. And then the next one into the end of November, those were very similar in size. And then on that up move, we can see the small corrections that started in November and then in December and then early January up to now. Those have all been pretty similar sizes. And then we had a little bit larger one. So on the Fibonacci retracement, right around the 618, which is around the 3,800 level, that would be about equal to that previous correction. So we'll keep an eye on that. A little bit of divergence up here on these last highs on the RSI, and on balance volume may be turning down a bit, which is in line with a little bit of a correction. But we're going to look now. We're going to go and look at the chart of Amazon. I presented this on February 4th on David Keller's final bar. And since it's still in the same pattern, I thought I'd show it to you today. And it's in a triangle, a coiling pattern. Eventually, it's going to come out of this coil. Now, the range of the pattern is around $680, and you can do a measured move target on these types of patterns. Of course, they don't always get to the target. Sometimes they will exceed it, but it's a good rule of thumb to at least just measure it out. So you just take the height of the pattern, and then you can project it up and down from where the breakout is. Now, one thing interesting to note is the RSI down here. It's been in a sideways range, and I've got this pink dashed line marked in as sort of the support area. So if Amazon has an upside breakout, you would want to see the RSI start to climb back up towards that 70 level. If it has a downside breakout, then you'd want to watch for it to confirm by breaking that RSI support. Okay, now we're going to spend some time today on three charts of advanced micro devices. And we're going to look at and outline some current patterns. So this is a daily chart. The symbol is AMD. And you can see that I've got some blue dashed lines marked in here that are showing potential support. Well, the upper area around the 73, 74-ish area, that's been tested a few times back in July, August, September into November. And then AMD headed up towards the 100 level. Again, a big round number, and you can see it's getting some volatility around it, similar to the S&P. So for now, it looks like some correction on AMD. But next, we're going to look at some charts that have some patterns that we can identify currently on AMD. So let's go ahead and move to the next chart. Okay, so first, let me move back real quick. Let me show you something. This area right here, from this 87 down to 76, back up, we're going to look at the pattern on this. And then also from this high all the way over to here, there's some patterns. So that's what we're looking at on this chart. So here's that area around the 76 that I just pointed out, and then this larger pattern here. Now, these are called butterfly cell patterns. And what these they are what are called extension patterns. And they form bi patterns as well. And it's an extended AB, and the CD leg extends beyond where the initial start of the pattern is, which I have marked here with the X. And usually some Fibonacci ratios on the extension, like a 1.27 or 1.618, up to about the 2.0 is generally what that extension is. And that's measuring from the X down to the A, multiplying by those extensions, adding it to the low, and there you have it. But I have this nifty drawing tool that kind of does it and projects it for me. So that's a very quick tutorial on these patterns. So here we're also seeing on the chart, I've marked in some gap areas here, and we can see that these lows in AMD have been tested into the top part of this gap. And there's another gap area where the price broke out to the upside in July from a previous range. Now notice over here, there's a pattern that was here, an A, a B, a C, a D buy pattern, and AMD has gotten a nice retracement off of that pattern. But let's take a look on the next chart. There may be a larger pattern, and we might be able to see some other areas of potential support that AMD may correct down to. There's one last pattern here too that we'll see on the next chart. It's called a three drive, a one, a two, and a three. So let's go to the next chart. So here's the butterfly, the smaller butterfly pattern. Here's the larger butterfly pattern, and I've marked the three drive in here. And the gap areas are labeled around that previous breakout area around $60. And I've also marked in the lower end of that range that was around $50. Now I have three retracements that are marked in. So let's walk through those. The first one is down at the lows from March. So I've marked them with the X's. And so that goes all the way up to the high of this pattern. Now, right down here, this this blue 382 just above the upper green dashed line, that's the 0.382 retracement of this larger pattern. And the 0.50 of that larger retracement from that low to the high is right here where this 0.50 is. In the yellow circle, you'll see a 127, which I'll explain in just a minute, and the 0.618, which is the retracement using this second X point up to the high and down. Now, so we're starting to see some confluence here if AMD breaks this upper green line dash support area. So let me walk you through a couple of things to watch on this. First of all, we can see here that we may have a larger ABCD buy pattern. So it's the top A, the B, the C, and the D. And this third retracement up here starts at the low of this support area that we can see has been tested in July and September and November. So taking that Fibonacci retracement from that low to high gives us this ladder up here of the 382, 50, 618, 786, etc. So these ABCDs can have extensions on those legs. And so anywhere between the 786 down to the first 382 that we just looked at from the large swing down, that can be an extension of that pattern. Now they can also extend to a 1618, which is marked just below that dash green line, right around that 70.70 area, and that's really close to this confluent area here of this cluster of fib ratios. Well, the 127 marked in that area, that's taking where this upper X is at that 73, 76 area. That's the low of the butterfly pattern, and coming up to the high and coming down with a Fibonacci extension of the 1.27. So we're getting quite a few numbers coming into that area, and that's also coming back towards the previous upside breakout area from July. So the thing to watch, you have to monitor these patterns, which is not hard. It's not hard to do. Once you think that you have one of these patterns, and you just continue to monitor the price behavior. And the price, of course, can change, and it can change the formation and the structure of some of these patterns. So you just continue to monitor it. But if the price does come down around this green dashed level here, around that 73, 74 area and break it, then I'll be looking around that 618.50, 127 cluster area for potential support and possibly another pattern forming in there for a buy. So you can't predict where or even a pattern will complete, but you can monitor potential patterns in advance. And so that's what this type of charting is all about. So once again, first of all, watching these areas above the green dash line for a potential pattern. And then if that breaks, then watching these areas down below. So lastly, if you like this kind of stuff, then I've just posted a new course on the Udemy.com site. It's a 12-hour on-demand video course, and you can find it. Go to Udemy and then type in that for a search, and it'll come right up. So thanks for joining me today, and I hope everybody had a great holiday weekend, and I'll talk to you on the next Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.